People who think Web3 gaming is not going to make it or like not back yet are deluding themselves. In Web3, in fact, there are more ways to be fun.
Hey everyone, joining today is Shi Khai Wei, co-founder and general partner at LongHash Ventures, which is an early stage Web3 VC that bootstraps crypto ecosystems via venture capital investments and an accelerator program. Welcome to the show, Shi Khai. Thrilled to have you here.
Hi Leo, thanks for having me.
To kick things off, can you share your crypto story with us and what were the initial nudges towards Web3 that you have experienced?
So our journey started back in like 2017 era, so the ICO period. And I started learning about ICOs because it just came across my table. Back then, both our co-founders, myself and Emma, we were at McKinsey working on digital transformation projects. And of course, blockchain being one of the most disruptive technologies and ideas that I came across. I started going down the rabbit hole, right, into whole decentralization. What does that mean? We were working on digital banking projects at the time, but looking at crypto, I felt that, hey, this is the digital bank, right? And then it extended beyond finance to other things like identity and different trust models. So to me, it was really a movement that captured my imagination. I started talking to everyone around me about the potential of crypto. And that's how I met my co-founder, Emma. And back then we were looking at what potential use cases there could be for crypto and blockchains. And there were a lot of ICOs, utility tokens, a lot of new L1s being, I guess, like launched with tokens or being fundraised for, but not that many useful everyday applications, right? And so we set out looking to build useful products for the space. And that's why we started as an accelerator. And of course, very quickly, we wanted to help other infrastructure projects find their adoption by supporting the application developers on those infrastructure and in those ecosystems. And that's where we found our product market fit for the accelerator. And then since then, we've set up 2 funds and invested across the stack.
Which verticals have you grown your interest in exponentially? And what do you think were the key drivers for this passion surge?
So I think the journey of crypto and investing in it has to respond and adapt to what the space is building, what the space is interested in, right? So initially when we started, we saw the need for application, and because there were a lot of L1s. But then once we hit the next bull cycle with the whole 21, 22, that's where we raised our first fund. We saw that, hey, DeFi summer was here. And there were so many experiments being run. So a lot of our initial investments there were in the DeFi space, right? So we're talking about things like Instadap, Zapper, Balancer, Synthetics. Those really, I think, did well in that boom and showed the potential of what chains can do, right? Of course, that was the first cycle where gaming came out as well. We didn't invest much in gaming back then. But we also saw how all of these applications, both DeFi, gaming, NFTs, push the limits of blockchain infrastructure. And many started to set up some sort of app chains or dedicated environments, need to think about scaling, need to think about user experience. So that's why in like the 22, 23 kind of period, we set up our second fund because we then saw the need to then address all of those issues. So it almost seems like it's a back and forth, right, between infra app. So that the previous couple of years, we've been looking at how do you scale, right? How do you bundle and unbundle by modularizing different parts of the blockchain? How to include complementary technologies like ZK or other kind of off-chain compute environments there. And of course, improve the user experience with things like account extraction, right? Be it through on-chain smart accounts, through MPC and so on. And since then, yeah, we've made quite a few investments in that infra segment as well. So things like ZK Sync, Neutron, Saga, Safe, quite a few others, Particle nowadays, Lit Protocol. And now into this new cycle, we start to see again, like, okay, now we have good infra and we have all the ingredients we need to make high throughput applications with good user experience. And then starting about end of last year or second half of last year, I started thinking about what is the next thing that the space needs, right? And I very strongly felt that we needed applications again. So I started using all of the apps I could get my hands on, right? Earlier last year, I already tried my hand at FriendTech. I figured out all the rooms and the keys. I know it's died down since then, but it was fun to use. There were a lot of clones that spun up, a lot of social applications. And actually towards the, I guess, second half of last year, a lot of games sprung up as well. And so I started playing all the games I could find, right? And I tried to figure out the community, the users. And in the end, I really landed on gaming as a sector that I have a super strong conviction in, that will onboard new users, new capital, new assets onto the space. And therefore, we started making quite a few investments in this gaming and gaming infra space as well. So I think that it kind of encapsulates our journey. I would say that it's not that things go in and out of season. More like the whole space is growing, right? And all of these segments are maturing at different speeds. So, for example, like DeFi is still there, infra is still there, and now like things like consumer gaming are emerging or progressing much faster. So we have to retain our understanding and theses in each of these areas and continuously add to them. So it's not like we just like not look at a sector once that cycle is over, but it's just that the innovation tends to then like plateau, and then we still monitor and invest at a steady pace. But in the rapid innovation parts is where we really need to pay more attention to.
Yeah, you mentioned you were dabbling into all these like areas like, social fi and GameFi, etc. What are the projects and tools that like really became your go-to like data or transactive or trading sources like since then?
Yeah, well, I think everybody in crypto knows that crypto Twitter is still the best place to be.
True.
Although I would say that I tended towards following either seasoned investors and builders. And I found that what they enjoyed using, right? Let's say if we're talking about infrastructure, right? Then I want to look at like what are the builders saying about infrastructure that they're integrating, or like what are the users? How do users feel about this like extraction infrastructure or products that they're using, rather than go with like what's hot and what's the flavor, which is important to follow as well. But to me, it's more like truth seeking, right? And you need to go through all the sources, be it on Twitter, on podcasts, speaking to people in real life, going to those events, setting up these meetings. I would say, yeah, that nothing kind of beats that old school face to face. Although recently we started using Kaito AI, and I must say that it has been pretty impressive because it can cut across all the platforms, right? Be it Twitter, Telegram, Discord, governance forums. So I'm impressed, and it seems that increasingly AI will start to aggregate a lot of the sources, and we can even fine tune it to the projects or people that we want to follow. So yeah, I think it's a constant learning process for all of us.
Definitely data-based infrastructure and data-based protocols will be more and more emerging in this cycle and just in the coming years. But let's talk more about the LongHash Ventures, because especially you're not just a venture firm, you're also an accelerator. How do these two entities intertwine? Like, do you usually have a cycle for projects to go through accelerator and then into venture firm, or do you have a different strategy?
So there are, I guess, two different ways that the accelerator and fund interact. The first and I guess most straightforward is that if any early stage projects come to the accelerator and they become more validated, then we can do some follow-on investment from the fund, right? So generally, when when the project goes through the accelerator, we want to catch them as early as possible. So it's more focused on the founder themselves, right? Like, do we feel that the founder has the deep expertise and the execution ability, the network in order to make this project work, right? And complementary skill sets. And we're okay to take a high risk bet there and follow the progress of the founder. And then once they are able to hit some sort of product market fit, right? Get actual things launched, get users, get more funding, get more in general traction, then we can double down from our fund. The more strategic way that these two interact is that for especially the second fund, our fund two, which is focused on infrastructure, there's an interesting dynamic where we can invest in infrastructure from the fund. and then we deploy the accelerator focused on that ecosystem, and then we can use that to then bootstrap the ecosystem and find them applications that will build on the infrastructure or ecosystem. So then it becomes like a synergistic dynamic.
Oh, that's actually really interesting because you have more value add than just like a simple venture firm, because you have these synergistic relationships, and because of the networks you managed to establish as an accelerator and as a venture firm. Scanning through your portfolio, LongHash Ventures especially has mainly focused on consumer-focused applications and infrastructure protocols, like you mentioned with your previous fund. And especially this was combined with aspects like modularity and abstraction. Is there a particular thesis you follow that guides your investment decision-making?
I would say that there's no investment thesis that lasts kind of forever, right? So to me, like I mentioned before, it's really about observing the space very keenly at the present moment and across the years, and looking ahead in this like 1 to 3 to 5 years. What does the space need that it doesn't have right now and needs funding and attention, right? So that's why in that kind of DeFi era, naturally it had to be then all of those experiments and new projects coming up. And then with the infrastructure wave during the bear market, which is then like looking at how all the applications broke infrastructure and like people complaining about gas fees, user experience, and then figuring out, okay, now we need that, right? And then that's why like now the shifting focus back towards more of useful products and applications again, because we started seeing really like I guess almost feels like oversupply and very inflated valuations for infrastructure starting like last year. And now I think people start to feel it. They're like, hey, it's all about the memes. Like, where are the applications? Like, where's the breakout app of this cycle, right? And then still in that search. So I feel that really observing the development, both in product and what the builders need, what the users need, what the overall space makes possible. That would be, I think, the overarching thesis. But for each fund, based on that observation, we do craft some of the most exciting areas for that period.
Yeah, and you also released a gaming thesis as well, right? I discovered also many NFT, metaverse, and gaming investments within your consumer-focused chunk of the portfolio. So what would you say were the key perks Web2 games and crypto can offer to each other to advance, respectively?
I love talking about gaming. I think the last few Twitter spaces and that I've done and people that I've spoken to really focus heavily on gaming as a, I guess, subsector of consumer, but in general as a application sector in crypto. Gaming is an interesting juncture because people like to talk about like, hey, I just now talked about like, hey, this is what crypto needs, right? Which is useful applications that people will come and bring on board new users, bring on board new capital inflow, spend time, engage, so on. In gaming, there's also the other side of the dynamic whereby the industry itself has a push factor, right? So we're trying to pull people in here, but the industry itself needs something like crypto and Web3, because right now gaming, after the boom that the industry experienced during the COVID cycle, I think there's been a lot of new games, new studios getting funded, but now I think because of that boom, like maybe there was some overexpansion or like overinvestment. Now we're starting to see like, hey, layoffs happening. We also saw some regulatory shifts. So China, of course, cracked down very heavily on the gaming sector, maybe one or 2 years ago. I can't remember the exact time now. And so a lot of the titles had to shut down, of the developers then couldn't go ahead and launch and publish their game. So they needed alternatives. At the same time, the kind of economic structure of distribution of games is also highly controlled, right? We have the app stores, be it on like the PC console platforms and on the mobile platforms, taking a huge cut, the platform cut of all of the revenues there. We're talking about like, 20-30%. And then on top of that, we have publishers in traditional Web2 and needing to spend a ton on ads just to get the eyeballs, get the clicks, right? And that takes up another, maybe 50% of the remaining revenue. And so what we end up with is hardly enough revenue to sustain the development and ongoing support of many of these games. A lot of the monetization mechanisms continue to get criticized And so there's a strong feeling that we need a new way to then distribute and monetize games, right? And I strongly feel that, hey, here in Web3 and crypto, we have new ideas that can really break through and help each other, right? So we need apps, we need users, we need spending, and gaming or Web2 gaming, they need distribution, they need new business model.
Could really like bringing Web2 games on chain enable new acquisition strategies for the whole crypto ecosystem?
Oh yeah, for sure. So firstly, I think everybody talks about play to own or the ownership economy, right? So I think the very idea that you can own and therefore like have more financial, I guess, more of a financial relationship and a financial ecosystem around these assets, items, is quite attractive. I think it changes the way we think about our spending or our assets or our earnings in game. And I think that opens up a lot of room for imagination, both in these games themselves and also in potentially complementary things, right? So DeFi can come back, right? So we can talk about like DEXs, we can talk about lending and borrowing and perps and all of those things that could be activated for in-game assets, be it tokens or NFTs, because that opens up new potential for economy. Therefore, it could potentially, I think, sustain certain game economies for longer, as long as, of course, the game itself is fun. And the other thing is with so that kind of like could be an organic draw to bring more players in. So then like it becomes more organic, hopefully. Of course, you can argue that, hey, is it organic if people come for the incentives? But at least they come from different reasons, right? It's a different model from just buying ads. And other thing is players can accumulate on-chain history or reputation, right? Because of ownership, because of in-game behavior. So now when I play a game and I acquire high-value NFT in-game, or I collect, or I have in-game achievements of me being one of the most skilled players or the longest player, or like I manage a guild that's super active and contributing to this game. Now we start to see these primitives becoming tokenized in the form of either NFTs or SPTs with soulbound tokens. And this reputation is also a new form of user acquisition or distribution, because now when a new game comes along and they want to then target players who are either high skill or high spending, or have shown dedication to a particular game, grown its ecosystem, created content, like hosted a whole guild, they can directly go on chain and find these players, and then they could whitelist them, they could give them airdrops, they could go through the partners and ecosystems that have a relationship with these players, and then distribute directly, right, through things like guilds, through things like game portals that are crypto native, through like chains and ecosystem, I guess, platforms as well, or engagement platforms. And instead of going through the traditional, again, ad networks. So we're really shifting the balance of power and economics away from the existing Web2 players and onto more of like the player-owned economies and player-owned identities, as well as the player collectives that form this gaming ecosystem.
Yeah, I think digital ownership, especially like with in-game assets and what you can do with them, like beyond gaming, even beyond crypto, that's really interesting, right? And I think that this is the kind of vision which really brought on the optimism about Web3 gaming space, especially during the last bull market, right, in 2021. What were particular elements that brought such hype in 2021? Because we weren't as advanced back then. There weren't as many tokenization opportunities or even like in-game utilities. What brought up such hype in your view?
Yeah, I think 2021 was a very special time because of COVID, right? And everybody was locked in. A lot of foreign workers were sent home. And especially in Philippines, it was such a special time because people then were looking for sources of income. And just nice, it was also the crypto bull market. And Axie just was at the right place at the right time and had the right formula, right? So it was a very simple game, simple tokenomics, right? Like play the game, earn SLP, right? And then simple loop of like, hey, you need to buy Axies, you need to spend the excess. So all of that was very direct, and then people play to earn very simply. And also it was a stroke of luck as well that the kind of scholar system emerged, because people who own the assets, right, you could manage the accounts to play the games separately from the assets that can be monetizable. So then the scholarship system kind of emerged organically, and that allowed for speculators, or I guess like financial asset owners, to then like buy up Axies and like offer them to other players to use in game. So I think that simplicity and the timing of the crypto bull market, of COVID, all that came together and drove Axie to insane heights, right? And of course, now we have lots of learnings from that episode. But I think it really showed that, hey, there are all these people who are willing to engage in these tokenized economies and try to make a living and try to learn new skills, right? Be getting to know a new ecosystem, like getting to know things like crypto and how does it interact with fiat and so on, and like interacting with blockchains. So I think since then, a lot has changed, right? So after the Axie cycle, people have iterated on that. Now we have games that have taken multiple years, right? Because a lot of people funded games after looking at Axie. And now after years of building, they're starting to launch. Some of them do have live gameplay, open beta, and so on. Also, everybody is trying to figure out more sustainable economics. What are the more interesting tokenomics, right? Removing the barrier to start playing, right? Making sure it's free to play, and then rewarding people in a more targeted way. Right? So not that everybody can just play and very easily earn. Now you have to then like, okay, maybe you start free to play, but then to earn, maybe you need to own some NFT assets. Maybe you need to demonstrate high skill. You need to demonstrate, like I mentioned before, that you are spending in game by owning assets, high skill, or you spend more time, or you can bring on board collectives. You can create content. So now it's a lot more dynamic and complex, so much less easily farmable, and hopefully that means more sustainable as well.
So would you say like in the last cycle, was it really like that more speculative hype of like these specific gaming platforms being in the right place at the right time? Or did we already start like the more sustainable user retention within that period?
I think it was a spark, and unfortunately that spark only lived temporarily, but it really showed us the potential far into the future of what is possible, right? That there are people willing to engage in this ecosystem. So yes, I think during that time, a lot of speculation, but I think many of them end up staying, and a lot of the funding that the Axie hype has generated has now been funneled into longer term projects and people and builders.
Right. And especially like looking in 2024, right? Like, and for LongHash Ventures too, one of your investment theses asserted that Web3 gaming will be the breakout vertical of the current bull run and bring real adoption to crypto. So how has it been looking so far for you? Do you think like we're really in the midst of getting that mass adoption through gaming?
Oh, absolutely. I think people who think Web3 gaming is not going to make it, or like not back yet, are deluding themselves, because the data is already there. I think the main place you can look at is Ronin. I think Ronin as an ecosystem has just risen from the ashes of the bear market. And we have people who are from the whole Axie era, educated about crypto, have been holding and following the space for such a time. They're more cautious, they know what to look out for, and they're playing games. So I think in the last year or so, if you look at the Ronin ecosystem, you would have found that like, hey, the daily active users has been surging. And right now we're sitting at above 1 million in daily active users or wallets on Ronin Chain. We're talking about top 3 blockchain ahead of what many consider the consumer or most popular chains like Solana or like Base or any of the L2. Ronin is ahead. The reason for that is because they have fun games. And the number one game there, if you look at Pixels Online, which can seem quite simple, it's more like a casual farming game. You can go and cook, you can make wine, you can form guilds, you can have a pet and level up other skills. But that has attracted, at its peak, 1 million daily active users as well. And right now it's still at, between 800,000 to a mil or so. and they're continuously innovating. They're releasing their chapter 2 at the time of recording, in a matter of days or hours. So yeah, I think there are already very early signs. Aside from that, there are also polished games that have launched or shown very promising beta. The other one that I really enjoyed is, of course, Parallel. And their trading card game is, I would say, on par with many of the most popular Web2 titles in terms of the lore, the graphics, the gameplay mechanics that are complex. And in fact, it's not just me saying it. It is the most competitive players from the most popular card game, digital card game Hearthstone, that they've managed to attract into Web3 and are publicly endorsing Parallel and like defending it against people criticizing Parallel for being an NFT game. And they said, like, no, guys, there's a real game here and real gameplay here. Just come and try it out. Like, what's wrong with owning NFT assets? So I think these signs really give me a lot of reassurance and confidence, right? So an example like Parallel in terms of quality, an example like Pixels, very crypto native, and Ronin, more from a quantity and metrics perspective. And aside from these two, there are just so many that are incoming. In the last few months, I've just been trying so many games. And whenever I meet people, I can just show them on my mobile, like, hey, look at this game. Like, did you expect crypto gaming to be this level of polish? And consistently, people are surprised. And that makes me more bullish, right? Because it's usually a pleasantly surprised reaction. They're like, oh, wow, I didn't know it was already so polished. Oh, wow, I didn't know it was so fun, that was ready to use. I didn't know that, yeah, you can just create a wallet with email and just start playing straight away, right? And once they realize, then the excitement starts to grow.
Yeah, I feel like definitely like the sentiment across like investors and projects, like you see more and more like maybe simpler interface or simpler action, like especially mobile games coming out, and people don't even know that they're Web3 based, especially if they're published on platforms like Apple Store or Google Play. It just feels like another mobile game, but you have so much more incentives there. You have so much more avenues to as you mentioned, this kind of play to earn method, or even get incentivized with NFTs or in-game purchases, etc. So I think we're moving into that direction where we're really utilizing the lessons we've learned from Web 2, what works, what doesn't, and implementing that to Web 3 and kind of giving people what they're familiar with, right? Because crypto, that's the difficult part about it. People are scared of it, right? Because they don't know what this is. They're scared of the tech, they're scared of the user interface. It's very different than we're used to. And we're definitely getting into the space where it's getting better, but just kind of having those pinpoints of especially like the gaming industry being very similar and having similar products to Web 2, I think that's definitely like a good threshold to have to onboard like more Web 2, more traditional people. But looking at the sentiment, I mean, especially across media and even investors, it does feel much more skeptical than before. And maybe because we had such a crazy hype last bull run, and a lot of investments maybe didn't pan out, or maybe games are launching now and it's not what people expected. I think especially looking at the technicalities, right? Like limited life cycle, extremely difficult exit strategies, or significant return avenues, sustainable life cycles. These kind of concerns have been really like running around, like especially amongst the VCs. How do you counter such concern with the game industry?
Right. I think, to be fair, many of the doubts and criticisms are indeed valid, right? I think in the last cycle, when Axie broke out, a lot of copycat games came about, and they had similar economics, right? They didn't innovate much, right? They were fast followers, and they equally failed, right? And also many of the investments that were longer term just took time, and people wonder, right? Hey, are they going to launch or not? And actually, that is the typical experience of Web2 gaming as well. You give money to a game studio and you just wait for years and years, right? And they might go through production hell, redesign, and one day just tease and they just launch. In crypto, we're not used to that Right? We want like, hey, I want the token now. I want to see results. I want to I want the number to go up. So I think very fair enough, right? Our attention span and patience may not be the same benchmark as in Web2 gaming. So we had to wait. But now I think it's quite an interesting juncture, right? Now we're starting to see games start to launch. Now there's another criticism, which is then, sure, okay, maybe they take time, and now games are launching, and now I see the games, and you still feel that, but these are like low quality games, right? And like, if they can make it in Web 2, why are they coming to Web 3, right? The top game studios are still launching in Web 2, right? And you look at titles, for example, like Pal World. There was such a hit title, and the developer was actually from crypto, apparently, and then he left crypto and published his title in Web 2, and it did super well on Steam. I think hundreds of millions in revenue. And if you look at the games here and you compare it to the top games in Web 2, in general, I've played a lot of the Web 2 games. I would say in general, the quality is not quite yet on par with the best of Web 2 has to offer. But I think that's to be expected. I mean, we are a newer segment, a newer, I guess, like subsector. If you want to compare yourselves to all of gaming, I think that's great. I think the goalpost has shifted. I think back then it was like, oh, just one game. Like, where are the other games? It shows the other breakout games. And now, like, hey, all these games are launching, and some of them look quite good. And now we start to compare, like, oh, but can they match with the best of Web 2? Right? And like, okay, so that is the next milestone, right? Now we need to have a game that is as good as the best of all of gaming, plus having crypto elements and plus having good tokenomics to figure it all out. So the bar that we have set is so much higher compared to some years ago to Web2 gaming. So fully understandable about the skepticism. Now, as an investor, what does that mean for you, right? So firstly, I think applications in general have shorter life cycles for I think especially entertainment and content, right? You consume it and then you go away, and it's the same in gaming. You see it in Web2 gaming, and that's why people love to do sequels, right? If a gaming title does well, right, they'll do sequels, they'll do reboots, and they keep using the IP. We can do the same in Web3 gaming, right? If an IP does well, and especially now that we have ownership, right? We start to be like, hey, you own this character. Hey, you own this avatar. Hey, you own this items in game. You can start to use the same IP to create multiple titles, right? So it becomes an ecosystem. In fact, you see this already with Axie and on the Ronin Chain, where like Axie actually has multiple titles. And in fact, it has player-created indie game modes as well that use the Axie IP. And I think that can give games kind of longer lease of life, especially if you open up to the community to then develop these games and also tap into the same IP network and the same IP community. That's one way to think about it, right? That you can extend the lifetime. The other way to think about it is that rather than just supporting your own IP, you can start to then become kind of a publisher role to other games as well. And this is, again, what we see with Axie and Ronin Chain, right? So now they've become Ronin. Ronin is one of them, the leading, I would say, publisher right now in Web3 gaming, having brought on board Pixels, which is a smashing success, and other games which are on the rise as well. If you look at, for example, the recent NFT mints that they've conducted with things like Hydro or things like Ragamon with Ragnarok Monster World, the NFT mints just sold out instantly, right? There were whitelists and the public mint just instantly sold out. And they weren't trying to, raise a huge amount and get people to spend thousands of dollars on these expensive items. They're like, hey, okay, here's like tens of dollars, or at most like maybe a couple $100 for the more exclusive ones. And it feels much more like, hey, this is a retail purchase. And people are willing to then like, hey, just put in some. And then let's see where this goes, right? And if you're more bullish, you can go and acquire more from other players in the open market. And some of them have done well in the open trading as well. So, hey, if a game does well, it can also start to support other games and become a publisher, become an investor. And we also see this is a normal occurrence in Web2 gaming as well, right? So if you look at how PUBG start to go and publish other games and many games that became hit titles, they become these publishers. Now, the last way is to then extend yourself across the stack and own different parts of the stack. right? So again, I'm going to point towards Axie Ronin Chain, where you start off as game and now you have a chain. And then you have the complementary projects that go along with it, right? Like Katana Dex, and then you have Mavis Market, right? NFT Marketplace, NFT Launchpad. Then you have your wallet, which can then serve as your identity, NPC wallet, payment, things like that. So you become more fully integrated. And we see the parallel for that in Web 2 as well, where you look at a project, a company like Valve, and they started with some titles, right? Like say Half-Life, Counter-Strike, and then they went on to build Steam. And now they have VR headsets, right? And they have Steam Deck hardware. So you can extend your lifetime or transform yourself into then like infrastructure company across, or like basically a technology company across the stack, right? By letting other people use what you've built, or building new components that complementary to yourself and then open up to others as well. So I think we will see all of this in crypto gaming or Web3 gaming, right? That the hit titles which have sufficient revenue, users, attention, can convert that and extend their success, provided they have the ability and the leadership to do so.
Mhm.
Now, I want to approach this from a different angle, which is then, if you feel that it's too difficult as a retail investor, or I guess like trader, speculator, to try to predict which of these hit titles will make that leap into becoming a giant, of course, very few of them will. You could go straight into projects or ecosystems that already have this set up, right? So some of the investments that we are bullish about in our portfolio right now are, for example, YGG, Saga, Ronin, Zentree, and these are platforms that are already there, right? Already have this network effects. So if you look at YGG, for example, the treasury already has game assets and tokens across multiple games, and they've invested across many games over the existence, the lifetime of YGG. So rather than bet a singular title, you can just hold YGG, and then that gives you indirect exposure and access to many of these games and assets that they have supported over the years. Similarly, with things like Zentree and Saga and Ronin, right? So Zentree is an engagement platform that is launching the Game of Games engagement. But in their treasury, they've actually invested in plenty of top-tier games as well. If you look at, for example, Saga, they are a newer L1 chain. They're an L1 to launch L1s, but they have also their own publishing house, and they have a couple hundred of innovators which are already experimenting with their chain, and quite a few titles that they're supporting. And so again, their exposure is spread out across these couple hundred games there, right? And of course, I've talked about Ronin a lot already. So these give you multiple hits, or you can look at these projects as indexes or indices of the gaming sector. And by owning their tokens, not financial advice, that gives diversified risk profile that you might be looking for.
But I think there's also a problem, at least what I've noticed with the publishing companies, and also drawing these parallels with Web2 games, is that games tend to follow like the exact same development blueprint, and like lacking in like unique ways of like approaching the game, or simply lacking fun. And I think nowadays, like, people are really looking just to have some fun when they're gaming. Like, either you're skilled or not, like, you just like wanna, like completely immerse yourself in that kind of world. So do you think, like, for example, things like fun would beat factors like graphics, or strategy, or other matters like this that could maybe be a bit of a problem with like publishing companies, because they would follow the same success, kind of blueprint that they've had before?
For sure. So exactly as you said, one of the key criteria is fun, right? And I think all of these guys realize that. They realize that, hey, the baseline is that the games need to be fun. And when we look at these gaming platforms, the ones that I mentioned, all of them work directly with the gaming projects themselves. So the founders, they test it out. Their communities are made up of gamers who give that feedback and, I guess, insight and perspective into which games are actually fun. I like that you pointed out things like, graphics and other Web2 measures. In Web3, in fact, there are more ways to be fun, right? Like,
Mm-hmm.
sure, that it could be a really polished game with fantastic graphics, or you could have some new innovative gameplay. You could also introduce other financial elements that people feel is fun as well, right? I would say that speculation, when it is done like not at a overwhelming level where you put in your life savings and so on, is a form of fun, right? Where I'm like, hey, maybe I should play this game because I think this game is going to be huge, and if I
Mm-hmm.
am early to this game, then I can like be part of like the ownership, the upside, or I have all these assets that newer players want to utilize as well. Or I might be able to earn, by being very skilled at this game, and I think this game itself will be huge, right? And therefore these tokens will be worth so much. Within a game, right? There may be different NFTs, right? Let's say you have different monster types, and you want to say, okay, I think this particular monster type is going to be really popular, and they can speculate on that. So you have more sources of fun baked in. And as long as it's not, overly hyper financialized, I think this is a great supplementation to what Web3 gaming can offer.
That's definitely true. And I feel like, especially looking at different avenues that are growing out of Web3, we have also guilds that play a very interesting role, right? In getting users on board, in getting like feedback back to the games and gaming publication. You mentioned like Guild, which is now Zentry, their game of games. We have like guilds of guilds, like Yield Guild Games, which is one of LongHash Ventures investment. Why do you think guilds are special at this point in time, and how do they counter maybe some challenges that Web3 gaming experiences, like for example maybe bots and Sybil attack threats and similar challenges?
I think YGG's spirit is very different from what I've seen in the rest of crypto. There's a strong community spirit, right? If you look at their recent tour in the Philippines and how many people showed up and people cosplay, in like YGG and like different localized versions of communities, you really start to get a sense of like, hey, this is a group of people coming together and having fun together. And we're looking out for each other, right? We're looking out for good games. We're looking out for ways to improve our gameplay and like progress in game together. I think that spirit is quite different from the rest of crypto, which can sometimes feel, really PvP and zero sum. It's like, oh, who's dumping on who's buying. Like, this is like, hey, we're having fun together. As a kind of byproduct of that, which is now then becoming the larger vision for YGG's guild protocol, because we have people and we have people doing things together. We have activities, behavior that we can now capture in the form of soulbound tokens, right? So they have super quests, which are then integrate directly with the games, or the guild advancement program, where they can recognize different behavior and activity that contribute to a particular game or ecosystem. You can start to capture these, I would say, proof of humanity data points, right? Where like, hey, I've played with this person, I've engaged with this game, and this kind of complex behavior that takes time to accumulate. And from there, we can start to recognize who are the real players and who are the, I guess, high value contributing players to a new game or to a new ecosystem. And this is a total game changer, especially in Web3. And this is a problem that not only Web3 games face, but all of crypto face, which is then like Sybil attacks, right? You've seen the recent drama around like how Layer Zero is trying so hard to filter out all the Sybil attacks. Our portfolio CK Sync, people criticize them as well. Of like, hey, you had all these Sybil farmers that you didn't catch. Like, why didn't you catch them? But then some people are like, no, but I worked so hard to farm these protocols. Like, why are you not rewarding my behavior? And I think all that comes down to, firstly, we don't know what's human or what's not, right? You're just using machines, and we also don't know what is a valuable behavior or what's not. And so having this social layer and social data points, and I guess what Gabby calls the cookies equivalent in Web3, allows us to then counter that. Right now we say, okay, this is an actual person, and these are the useful behavior that they've contributed, either in another game or protocol or in your particular game and protocol. So that allows you to target your airdrops, your whitelists, your token distributions a lot more effectively. And I think all of crypto will eventually learn from this problem that crypto gaming has, and then incorporate many of these strategies and reputation systems in all of their protocols. I would add one last thing, which is then, and not only is it the individual identity, it's also the group identity of guilds, right? Like, who do we associate with, right? Is it because we play together, we like a particular type of game together, or we're from a particular region together? And this kind of like collective identity is both an antidote to like what I mentioned before, this individualistic kind of PvP mindset, and also it helps with the protocol onboarding as well. When I try to figure out like what is the identity, it's not just you, but it's also who are you part of, like who are you friends with, who do you bring along with you, the associations, and all of that kind of helps me build a stronger protocol. If you want to go to the lowest level of like, hey, what makes blockchains resilient, what makes them effective, it's because of decentralization. And what is the source of decentralization? It is diversity, plurality, having different humans come together and believing in the same protocol, running the same like nodes and validators of this chain, right? If all of the validators were run by like one centralized server or by one person, then it's not a blockchain. It's not the idea of Web3. So having different collectives that you can show come from different regions, different interest groups, different data point, different history, different kind of behavior all around the world from different sectors. That's how we can actually improve the resilience and growth of all of Web3, right? And we can actually bring this social graph to other types of infrastructure. You can talk about DePIN, you can talk about like nodes, even like L1s eventually, and bring that level of decentralization and social graph to all of that.
Yeah, I mean, I feel like we do forget sometimes the original Web3 thesis, right? Like when we think about, oh, we're supposed to be decentralized, we're supposed to be community based, like we're supposed to bring like that global access for people to be financially independent and to have communities online, you know, from other sides of the world. And I think gaming plays a huge part in that because, as you mentioned, you can also have fun and not only be, you know, like how to make money, how to do this, you know, how to get ahead. It's also just like a very casual day-to-day experience. And especially like for you, like looking at the portfolio, like we talked about YGG, we talked about Saga, Ronin Chain, also Zentry. Like, what do you think like are the key lessons like you've learned by investing in these protocols and looking ahead? What projects to invest to? Is that like community-based aspect one of them, and what others like are you focusing because you've learned those from your previous investments?
One of the most exciting areas that crypto lacks today is exactly that social layer, that social graph and behavioral data points or cookies, how you might want to put it, and ways to reach users, that distribution question, right? That ensures that you are actually reaching actual humans and not just like bots or farms. Actually, I love to refer to Vitalik's paper on decentralized society and how that creates, you know, more resilient, a more plural, diverse, and sustainable social fabric in all of crypto, right? And I think we start to sorely feel the lack of that right about now, right? In parallel with us trying to figure out the breakout applications, it's also like, but then even if there's a breakout, you'd be like, oh, it's all farmers, it's all Sybil. So how do we know as humans, right? And how do we continuously engage people and retain these people? So yes, I think all of these feed into a larger, I think, longer term thesis that I'm forming around this social layer of crypto, right? We have the apps and infra, and then now we need the humans involved as well, and a lot of the data points brought on chain. I think one common trend we see across all these particular projects that we just mentioned, with YGG, Zentry, Saga, Ronin, all of them have been around for some time. Saga is a relatively newer project, but they have been around in the space as well for years, right? The founders, Rebecca and Jin, have been trying to build things in the crypto space and keenly aware of the pain points. So one of the major learnings that we've had over the years is that it's not just about the expertise of the thing that you're trying to build, right? Let's say like in gaming or like in this particular infra technology like ZK. It's also really deeply understanding the unique dynamics, timing, right? How the different players in crypto behave and think. And often it either takes a couple of tries or some time, either building or immersing yourself in the space. And so we really look out for crypto native founders who tap into that spirit and understand that game. And not necessarily meaning like, full degen and like disillusion and like, oh, none of this matters anyway. Actually understanding the speculative potential and power, being aware of that and still harnessing that power, but still building solid and useful products that we will use and need years to come.
I feel like we could talk about this for hours, like what kind of impact like GameFi can actually bring to the crypto ecosystem and even beyond. And there are so many untapped opportunities as well, like to bring that social layer into crypto and to bring that social layer just amongst our peers. Can you share with our listeners how they can follow your investment journey, and also how can they learn more about LongHash Ventures?
I would love for everyone to join us on our journey. I like to tweet a fair bit, and I definitely amplify the ones I find interesting. On Twitter, you can find me at the Shi Khai, so TheShiKhai. And please, of course, follow our official channels for our big announcements of new investments, new research, new thesis pieces coming out. So that will be LongHash VC on X.